Welcome to an episode of Need to Know Economics, where I cover anything regarding economics, history, technology, and politics. The past several years, you cannot help but be pessimistic about America's future. The division within our politics, inequality between the rich and the poor, and the lack of opportunity of our youth and families. But we also have worries outside of our borders, in the Middle East, Russia, and with the sudden rise of China. China's rise to become a superpower has become a topic both the left and the right can agree on, and is an easy position to agree with. But is China really a threat to the United States? We'll take a look in this week's episode of Need to Know Economics. The answer is, as always, it depends, but highly unlikely. Here at Need to Know Economics, you'll hear a common theme of opportunity and freedom with youth and families, mostly because it plays the most major role when it comes towards economics, demographics. And now we'll take a look at how freedom and opportunity has impacted demographics in China and has ultimately resulted in the rise and fall of China in the future. What we are looking at here is the population growth rate of 5 major superpowers: China, Russia, India, Japan, and the United States over the past several decades. As we discussed in the previous video, massive social programs along with globalization post-World War II caused a massive baby boom across the world. That massive baby boom and population growth helped boom economic prosperity across the globe by leveraging these large populations for consumption, labor, and globalization. As economic prosperity and innovation grew over the past half-century, so did lifespans, which turned a very large inflationary working and consuming population into a deflationary savings and retired population. As countries like the United States have allowed immigration and increased freedoms to promote an eco-generation to increase population growth, countries like Russia, Japan, and China did not. We are looking at a demographic map of the United States versus China. Within this map, you can see the size of each age and gender, along with the surpluses amongst these groups. As you see, the United States has a huge eco-generation of millennials to replace that consumption, labor, and purchasing of assets from the baby boomers. Along with large immigration populations that will be added in the future, typically with higher birth rates in the domestic population also. China, on the other hand, has no eco-generation, nor has a history of sufficient immigration. This chart you are looking at is the collapse of China's superpower ambitions. We are going to explain why this has happened and what will happen in 4 parts. Part 1. The rise of China. Following World War II, China was ruled by communist leader and founder of the Chinese Communist Party, or other known as the CCP, Mao Zedong. Mao was a brutal dictator that believed Soviet style of central planned communism was the most effective style of economies and government. And this economic and government style of communism should not be confused with economic styles of socialism around unprofitable industries or unproductive debt structures. But rather, this is a fascist form where the entire economy, government, and every individual's lives is micromanaged by one supreme leader and central planner. Anyone who's ever worked any job knows that this is a very inefficient way of even running a company, let alone a country of 1 billion people. At the time of Mao's leadership, China was still a very agrarian economy following the century of humiliation by the British's drug trafficking of opium and by Japan's horrific attacks on Chinese cities, such as the raping of Nanking. Following seeing the industrious nature of the United States, Japan, and even Russia following World War II, Mao as the supreme leader had his own vision and ambitions, the Great Leap Forward. I could run through the horrible Great Leap Forward in a whole other video, but it was basically a fascist centrally planned campaign to change China from an agrarian economy into an industrious economy. The Great Leap Forward was disastrous, as the CCP micromanaged which workers were leaving their agrarian economy for the industrial economy, while still trying to maintain the same levels of production for their growing population. This left over 50 million Chinese dead due to starvation and famine, all as a result to this Great Leap Forward campaign. Despite over 50 million Chinese dead due to this campaign, the Great Leap Forward did industrialize many parts of the Chinese economy, to a point where China saw a population growth rate of over 3% following this period. The population grew so fast that the central planners feared inflation, and implemented a fascist one-child policy in China in 1979. This policy forced families to have abortions after having one child, and it also created a culture of single-child families that favored males. As communism and fascism always does, it brought prosperity to the politically favored few by the central planners and death and destruction to the others. But in the end, China saw a massive population boom. Part 2. Communism meets capitalism. Following the globalization of the world in the 80s and how supply-side economics helped produce more goods and yielded inflation, China took some notes from the Western economies and began to implement pieces of privatization into their economy as their baby boomers reached peak consuming and labor age. This worked out great for China. The one-child policy produced the world's largest, cheapest labor of 20 to 30-year-old men at the same time as the world had the largest consumer population in the world. On top of that, countries like America and Japan were willing to sacrifice their own production and manufacturing for corporate profits from cheap supply chains and cheap labor. So the free market capitalist world put the communist Chinese population to work. Makes you think how stupid these ideologies really are when you put it that way. So this large generation of Chinese men and women migrated to centrally planned cities and centrally planned manufacturing plants across centrally planned infrastructure, as China built the world's goods as the world built China. This is a 20-year difference example of one of China's centrally planned cities, Shanghai. And this is about a 50-year difference between one of China's centrally planned cities, Shenzhen. China was now planning on urbanizing Chinese workers into industrious cities by spending trillions of dollars on a high-speed rail into these cities for blue and white-collar jobs. This is a comparison of China's high-speed rail compared to the United States. As you see, we have none, and we still operate on 200-year-old privatized railroads. Even today, over 80% of China's top companies are state-controlled, while China allows privatization in more speculative industries such as tech, real estate, and green energy with companies like Huawei, Alibaba, and Evergrande. Part 3. The Great Realization. One mistake mainstream narratives make about Marx and Marxism is that Marx hated and opposed capitalism. We'll cover Marxism in a future topic, but Marx believed capitalism was needed for a socialist transition and that capitalism would eventually consume itself. China had realized they needed capitalism to advance their economy and innovation with their large working class, but knew a capitalist crisis was brewing. This crisis wasn't just in China, and as we discussed before, was moving across the world, while once huge consuming and labor populations were transforming into retirees and savers. And because of a one-child policy and lack of family freedoms and support, China is projected by the UN to lose over 700 million citizens in the next 100 years, and over half of its workforce due to demographic changes. A country and economy centrally planned with factories and cities to employ the largest workforce in the world is now projected to see that cut in half. This is a comparison of the United States population projections versus China's. Below is Japan's and Russia's, two other declining economies. With this crisis brewing, China realized it needed to revert back to communism and control, as it basically made its current president Xi president for life, and has cracked out on most freedoms and capitalist trends in Hong Kong and with Alibaba and others over the past several years. See, capitalism revolves around profits, and in order to achieve profits, organizations need growing populations to employ, lend, and consume more goods. When populations decline, capitalism reverses and eats itself to shrink production, jobs, and consumption to find an equilibrium with now this smaller population. This is one of the issues that caused the United States' Great Depression to become so severe, and China is just in the beginning process of this. One sign of this event is the recent crisis with Evergrande, China's largest private real estate company. Evergrande had become the largest real estate corporation in the world, building Chinese condos, homes, and commercial real estate. But in September of 2021, Evergrande's debt-financed bonds were no longer accepted as collateral in the global financial markets. In other words, much like mortgage-backed securities used as collateral were listed as junk following the 2008 subprime housing crisis, now the same is happening to Evergrande's real estate investments with their bonds. This took Evergrande's over $100 billion market cap to almost nothing instantly, leaving the ever-ending growth expectations for China up for debate. Part 4. The Great Stagnation. Now I can't predict the future, as many major factors such as war, another pandemic, or political instability in the United States may arise, but based on macroeconomics, China is looking at the largest stagnation in world history. By 2060, China is projected to lose over 100 million citizens due to demographics, and over 400 million citizens will be over 65 years old. China's over 65 population will be larger than the entire United States, and will be almost 40% of the Chinese population. Going from once productive Chinese workers in factories, getting mortgages to bid up real estate, shopping at malls, to now retirees living off of savings and welfare programs, burdening unproductive healthcare systems, and no longer demanding loans that once ballooned Chinese assets assets to over a $50 trillion market cap. And due to the one-child policy, they won't have enough young people to buy these goods, homes, and assets from this elderly population, leaving a huge deflationary demand issue, much like Japan. A country already known for its poor government malinvestment of its ghost cities will now see millions leave these once booming cities they created. And on top of that, Chinese families are expected to continue to produce lower and lower birth rates as housing has become more unaffordable due to the speculation in the real estate market by their baby boomer generation. And China isn't making it any more convincing for foreigners to want to immigrate to their country either, with their anti-democratic and fascist actions by the CCP. In the next 100 years, the CCP, like any fascist and communist regime, will do anything to keep power, and will do anything to centrally plan through this crisis. And sadly, potentially at the sake of many others, like many central planners before Xi have done, such as Mao, Stalin, or Castro. The CCP will most likely close off China while losing its once dynamic workforce, while losing global investors, consumers, workers, and institutions looking to allocate capital on new emerging technologies like cloud, AI, robotics, and the decarbonization of the globe, priming the United States to dominate the 21st century. Now that's not to say that China still won't be an economic threat, because they'll still have over 600 million people aged between 20 and 65 in 2060, but it's way smaller than the over 920 million they have today. Now we're going to end this video with a few final last thoughts. China has seen its economic growth and GDP grow over 8 to 9% year over year over the past 40 years due to this large population boom and opening of its markets. In order for China to grow at even 8% per year to 2060, it will need almost a $350 trillion GDP, and it's at about 15 trillion right now. With a GDP per capita of roughly $11,000 today, noting that China will have 300 million less people at that time, the average Chinese citizen would need a GDP of almost $400,000 per person, and will need to produce at least 1 to 2% more per capita on top of that 8% GDP growth rate. And that's noting that today the average Cuban and Mexican GDP per person is around $9,000, very similar to China's, and the average United States GDP per capita is around $60,000. This is the equivalent of the average Mexican or Cuban citizen becoming as productive as almost 6 Americans in 40 years. And this is nearly impossible, including with China's demographics. And that's even despite all the political, social, labor, and internal factors that could hinder China's future growth. If the United States and China continued to grow at even a 3% growth rate over the next 40 years, the US would have over $30 trillion more than China's GDP, just based on these aging and demographic factors. China's demographic boom was once its greatest tool to its success, but because of poor social management by the CCP, will now be its greatest factor of its decline. And this is where I open it up. Where do you think China is going? And do you think China will surpass the United States, or do you think they will restore population booms and birth rates? Or do you agree with this video and think China's on the verge of collapse? Please comment below what you think, and make sure you smash that like button if you love this type of content in this video. We also created a Patreon to support us in making this type of content. Just search needtoknoweconomics.com/Patreon to join. Here at Need to Know Economics, we support investing in our own futures. That's why we partnered with Public to bring you this video. Public is an investment app that focuses on transparency, which is why Public doesn't sell your data to hedge funds who are looking for a competitive edge, unlike other commission-free investment apps do. Public makes it easy for anybody from a 6-figure salary down to working minimum wage build wealth by fractional share ownership or owning portions of a stock. Feel free to try Public at needtoknoweconomics.com/public. Thank you.